Welcome to The Explainer. Today, we're doing a deep dive into one of the most talked about, most volatile stocks on the market, Tesla. We're going to cut through all the noise, all the opinions, and look right at what the charts and the data are telling us about where this thing might be headed. So, to really get where Tesla is right now, you first have to understand the absolutely wild ride it's been on. Just look at this number. In the single month of September, the stock shot up over 42%. I mean, that's a gain most investors would be ecstatic about over an entire year, and Tesla pulled it off in just a few weeks. And this timeline, it lays it all out perfectly. After bottoming out back in August, the stock just exploded, peaking way up there around $470. But since that high, it's pulled back. It's kind of hovering in this middle ground, which has left everybody wondering, what on earth happens now? Okay, so here's our game plan. First, we'll look closer at that recent roller coaster. Then, we're going to decode the technical signals that all the pros are watching. After that, we'll dive into the big battle between what they call support and resistance. And finally, we'll map out the three most likely scenarios for where this stock could go from here. All right, let's start with that roller coaster. You know, this journey from a huge surge to this sort of nervous pause is just classic market psychology. You had this massive rally fueled by pure excitement, probably a lot of fear of missing out, but this recent pullback, it's introduced a dose of caution, and that's created the standoff we're seeing right now. And now we get to the really good stuff. We're going to pop the hood and look at the technical indicators. These are basically the tools that analysts use to take the market's temperature, to measure its mood. And for Tesla, right now, they are telling a very, very complex story. First up, moving averages. The best way to think about this is like, imagine you're looking at a map of a really bumpy, winding road. Moving averages kind of smooth out all those little bumps so you can see the real underlying direction the road is actually heading. And this is where it starts to get really interesting. You can see there's a major conflict happening here. The short-term averages, which reflect that recent dip, are sitting above the current price. That's a negative or bearish sign. But the long-term averages are still way below the price, which is a bullish or positive sign. So you've basically got the market's recent pessimism fighting its long-term optimism. Okay, next up we've got momentum indicators. So if moving averages show us the direction of the trend, these indicators, well, they're like the stock speedometer. They tell us how fast it's moving in that direction and, more importantly, whether it looks like it might be running out of steam. And this slide right here perfectly captures the market's confusion. It's like you've assembled a panel of experts, and they all completely disagree. Some indicators are screaming weakness. Others are just shrugging their shoulders, totally neutral. And then you've got one over there hinting that the stock might actually be oversold, meaning the recent selling might have been a bit of an overreaction. There is absolutely no consensus. Another really critical piece of this puzzle is something called the average true range, or ATR. Now, this doesn't tell you which way the stock is going. Instead, it tells you about the stock's personality. It answers one simple question: how wild is this thing on a typical day? And for Tesla, that number is 18.29. What that means is its average daily trading range is over $18. In the stock market world, that is really, really high. It's telling you that for Tesla, huge price swings aren't the exception, they're the rule. So this is what that volatility looks like in real life. That $18 range means that on any given day, it is completely normal for Tesla to swing from, say, $417 all the way up to $454. For this stock, that's just a typical Tuesday. It's a massive potential swing that you just have to respect. So where does this battle actually happen? All of this volatility and all this conflicting data, it all comes to a head at very specific price levels. Analysts call these support and resistance, and they are the literal financial battlegrounds for the stock. The idea here is actually pretty simple, but it's incredibly powerful. Just think of support as a price floor, a level where buyers tend to show up and say, nope, not going any lower. And resistance is the ceiling, where sellers tend to emerge and stop the stock from going any higher. The whole game is about breaking through these levels. So the first major battle line, the first ceiling, is right here at about $441. Now this isn't just some random number, it's a key technical level. For the bulls, the people betting the price goes up, smashing through this level is mission critical if they want to get back in control. And if the bulls do manage to break through that first ceiling, the next big boss battle is that recent peak up near 471. This is more than just a number on a chart, it's a psychological barrier. The market has a memory, and it remembers that this is the exact spot where the last party ended. That makes it a huge mental hurdle to get over. Okay, now let's look at the other side of this tug-of-war, the floor. The first line of defense for the bulls is this support level right around $431. This is a price where buyers have stepped in recently, and they absolutely have to hold this line to keep the stock from sliding. But what if that first floor cracks? Well, if that happens, then all eyes are going to shift down to this next critical level, around $423. This is an even bigger technical floor, and if the price drops to here, it's going to be a major gut check for the market's confidence in the stock's overall trend. So what you have is this epic tug-of-war happening at these key levels, and it's all being fueled by this messy, conflicting data. So based on the standoff, analysts have basically mapped out 3 distinct possibilities for what could be next. Okay, scenario 1 is the bull case. The stock finds a second wind, it blasts through that $441 ceiling, and it makes a run for the recent highs. Scenario 2, the bear case. It tries to break through that ceiling and fails, loses steam, and falls back down to test one of those floors we just talked about. And then there's scenario 3, the sideways shuffle. Basically, nobody wins, and the stock just chops back and forth in a range, trying to figure out what to do next. So the bottom line is this. Tesla is at a decision point. After that monster rally and the little pullback, the stock is just catching its breath, perfectly balanced at a crossroads. The technical data shows the bulls and the bears, the buyers and the sellers, are in a near-perfect state of equilibrium. And that leaves us with the million-dollar question, right? This technical analysis is amazing. It gives us the what. It maps out the battlefield perfectly, but it can't tell us the why or the when. The data is showing us a clear standoff, which means the next big move, the thing that breaks this tie, is almost certainly going to be triggered by a real-world catalyst, some big news, a surprise announcement, something that finally forces the market to pick a side.